Welcome to the Fund in Focus for Fidelity Global Future Leaders Fund, a global mid and small cap fund that's focused on persistency and consistency in selecting tomorrow's future leaders. Just to focus on who'll be running the fund, it's myself and my co-manager, Maroon Yunus. So I've been with Fidelity for 17 years. I've been an analyst for 10 of those 17 years, and then running the Australian mid and small cap fund for the last 7 years, and now launching on global. Maroon has been with Fidelity for over 10 years, and he's always been passionate about global stocks throughout his life. So both of us very passionate about this global mid and small cap universe, and it is a very dynamic universe that is very exciting. In terms of the asset class is global mid and small caps that are stocks between the $1 billion mark and around the $40 billion mark. You can see on the strategy snapshot diagram there that there is a significant amount of diversity also in the marketplace. But this really is the inception of innovation and the inception of leadership, where the large caps of tomorrow actually start and begin their life. They are truly tomorrow's future leaders. But there's a very wide breadth and depth of opportunity, and a very wide opportunity set in terms of themes, as well as individual stocks and sectors. You can see the theme table next to me is a multicolored one, and there's a whole range of themes across consumer, energy, industrials, and technology. And there's a whole range of themes that are available in this universe that are actually difficult to access in the Australian market. In terms of the diversity, you can see on the slide as well, there is diversity in concentration of the index. The concentration of the Australian index obviously is quite tight, with the top 10 stocks being over 40% of the index, whereas on a global basis, most of the really big ones are about 30 or 40 basis points. So it's a much smaller element of concentration within this index. The next slide also shows you the sector diversity is also quite broad. There's not a very dominant sector, such as in Australia, financials or resources, but it is very, very diverse. And typically over history, tomorrow's future leaders have come from industrials, consumer, and also in technology. And that's where tomorrow's future leaders have been found on a sector basis. So there's a very broad number of stocks that are available in those opportunity sets. The strategy snapshot, again, touching on that, it is a global mid and small cap, so it's indexed against the MSCI global mid and small cap universe, as I mentioned, between the $1 and $40 billion mark. We do have a couple of conditions with pretty normal sort of things, cash limit, also country limits, and then also there's a sustainability element of no munitions and other sort of expected sustainability constraints that we put into the fund as well. Why was it created is a question that's really interesting, and a number of clients have asked us to really think about using the process that you can see on the slide deck. We've won lots of awards for the Australian product. The Australian product's been a great success story. We've delivered very strong returns for clients over the last 8 years, and the number of clients have asked us to think about this product in a global context. So we have launched the Global Future Leaders Fund for that purpose, and so clients can access the global universe. So if you look at why, I guess it is a very differentiated universe. It is a very wide opportunity set. What we aim to achieve is a persistency of return and a consistency of process, but it is also a process-driven fund and a process-driven product. It is very growth. It has half the fund about is a growth fund, so half of it is about quality. If you look at the asset mix there, one of the big differences between the Aussie fund and the global fund is the QMTV mix has actually become QVTM. So quality is the prominent one that still remains, and that's around that 40 to 50% level. Then we'll have some value names next. Then we'll have some transition names next, and then we'll have momentum being a smaller part of the portfolio. But that mix still has a growth bias, but there is a very strong valuation discipline that sits right across the entire portfolio. And that's why you do get growth at a reasonable price, and consistency and persistency and quality, but you're not significantly chasing momentum or significantly overpaying for that access to that quality. In terms of suitability, this is really available to all Australian investors. And as I mentioned, it does give Australian investors access to global mid and small caps. As Peter Lynch said, big companies have small moves, but small companies have big moves. So this is also about returns and absolute returns, and the opportunity that these companies that are having explosive growth or hyper growth companies can also access. And that is something that is exciting. It is dynamic and it is fast changing, but it is quite exciting. And as Warren Buffett said too, Charlie and I would rather earn a lumpy 15% rather than a smooth 12%. And again, it is a volatile sector. There is risk attached to mid caps and small caps as they are earlier stage than your large caps. But over time, as those high returns compound, the smaller mid cap index relative to large caps has actually outperformed over a 20-year basis. And so that extra dynamic nature of the universe, that extra diversity of the universe, and that extra level of innovation that is actually in the universe creates that high return opportunity. And that's really what you are getting access to by investing in this product. If I just go to the slides, the process that underpins the product is similar to the Australian. It has the VSC, the viability, sustainability, credibility, which are, as we call, the pillars of success. And if you can find companies that have these pillars of success, they are very likely to be the future leaders of tomorrow. And if they are weak in one of these sectors, particularly credibility, they typically are the future failures of tomorrow. And that's where you get the unwinds. But the future leaders really come from high viability, high sustainability, high credibility companies. And as the slide shows, viability is really about returns. It's where the return on invested capital is, where it's headed, how volatile it is. And that's really what is, I guess, it's a limiting factor of what a company can achieve, whatever its ROE is. Second is the duration. It's how long that viability reality lasts for. And that's really driven by the market structure, by pricing power, by the reinvestment opportunities, and that's the duration of that return opportunity. And that tells you how long that viability can actually last for. If it's a single mine, for example, in a single location, it's a very short duration opportunity set. But if it has a significant TAM, it is very unique. It is solving problems for the world in a very unique way. And the opportunity of the universe is very significant. That duration could be very long, 10, 20, or 30 years. And we've seen that happen in Australia with companies like realestate.com.au, companies like Domino's Pizza, or even James Hardie, which is also in the fund already and has been a significant Australian company that's delivered that very high persistent returns, but also in a very sustainable way. The last one is credibility. So we look at credibility of the accounts and credibility of management, and also your ability to trust yourself in making judgments about management and the accounts. Can you see that they are highly credible? Can you see that the accounting quality is also highly credible? And if you can see high returning companies that are very sustainable and have very high credibility, the chances of having a really solid future leader is incredibly high. And to see these companies that I mentioned in Australia, and there are many examples globally that we own in the fund, they deliver phenomenal returns. And that for me, that viability, sustainability, credibility is really the underlying pillar behind the stock picking process. If we go then to the portfolio construction process, it's quality, value, transition, and momentum. And it's actually the VSC in another paradigm. So if you think about high returning companies with high sustainability, you're looking at a high quality business. And as you go around the wheel, it changes and the nature of the companies change. But the why we use that portfolio construction process is about risk management, because as your mindset moves from quality to transition to momentum or to value, the risk and returns that you deliver are determined by the nature of where the stock is, because that determines where the expectations are currently sitting. And that's really the key to the process control and where the risk controls sit within the process overall. So the great thing is there's a bottom-up process, which is the VSC, and from the top-down perspective, it's the QMTV or the QVTM in this case, and that really controls the bottom-up and also the portfolio construction process. And that's really the two key elements of the portfolio construction process. Another way that we've shown the process is with a funnel. So we've got a multicolored funnel up on the screen, and that is really describing the process step by step. It's a 5 or 6 stage process, and that's where we go through the quality filters, we go through the accounting filters, we also look at all the Fidelity resources available to us, all the analyst views, the behavioral finance views, the quant views, which look at technical analysis, insider selling, accounting quality also. All of these factors allow us to filter from 1,000 stocks in the index to 4,000 stocks that are potentially in that market cap range, right down to a few hundred. And then we go down into the detail. We look through the VSC in great detail. We think about where the company is on the QVTM journey, and then we do a risk analysis. Maroon and I discuss it at length, and then we make a decision of the position size, or even if we don't invest. So that's how the process works in a step-by-step basis as well. I'll just touch on sustainability. So sustainability is obviously very important to us. As I mentioned, that central pillar is about sustainability, but that also includes all of the ESG factors, and we have a slide on that up next to me. Sustainability is one of Fidelity's core values now. It has been, for me, a big focus, as it is the process and has been for the last 10 years in the Australian fund. But it's definitely become a deeper, richer discussion, whether that's diversity or environmental concerns or government concerns or social concerns, modern slavery, etc. All of these are considered when we think about our investments, which include a whole range of things, but carbon emissions and carbon footprint is also something that's very important in terms of the sustainability factor. And the fund scores very well on sustainability in terms of its ESG parameters, but also in terms of its carbon footprint and carbon emissions profile. So just to conclude, this is a global future leaders fund. It is a global mid and small cap fund that gives you access to the dynamic and ever-changing innovators and the future leaders of tomorrow. It is very process driven. It is a very disciplined process that has also a very strong valuation focus as well. So you are getting a growth at reasonable price portfolio, which has a very disciplined process. It uses all the resources that Fidelity has to offer globally, which is over 200 or 300 analysts around the world, provide us information on a daily basis, and we're catching up with analysts all the time, all around the world. So there's a constant flow of information between the analysts and ourselves. And that gives us an opportunity to be really on the innovation curve, to be on the curve of change, and to help us to find the future leaders of tomorrow. I'm James Abella for Fidelity. Thank you very much for your time.